So we're going to start at section 70201. All right. No tax on tips. 70201. Deduction allowed. Part 7 subchapter B of Chapter 1 is amended by redesignated Section 224 as Section 225 and by inserting, after Section 223, the following new section. So they're creating a new section, 224, qualified tips. So this is a new concept that is being introduced into the tax code. In general, there shall be allowed as a deduction an amount equal to the qualified tips received during the taxable year that are included on statements furnished to the individual pursuant to Section 60401, blah, 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 or reported by the taxpayer in Form 4137, which is if you don't get a W-2, you say, here's a substitute that I should have gotten. Okay, already, this is an important caveat, is that the tips have to show up on the W-2. And if they don't, they're not going to count for this deduction. Okay, so then we run into B, limitation. In general, the amount allowed as a deduction under this section for any taxable year shall not exceed $25,000. So that means you get up to $25,000 of qualified tips deducted from your income taxes. And then there's a phase out. The phase out is $150,000 if you're single or head of household filer, or $300,000 if you're a joint return. So for every $1,000 above that, your deduction is going to be reduced by $100. So if we think about the math here for a second, let's get the calculator here. We've got $25,000 for the deduction. If we divide that into $100 chunks, we've got 250 chunks of $100. So basically, there's going to be a phase out from, if you're single, 150,000 all the way up through 400,000. And then your tips deduction is going to reduce throughout that phase out. And same thing, if you're going with 300,000, it's going to be 300,000 through 550,000 worth of AGI. And they're using the same modified adjusted gross income that we saw in the Social Security deduction, where they're going to add back tax-free stuff, which is standard. Okay. Part C, tips received in course of trade or business. In the case of qualified tips received by an individual during any taxable year in the course of a trade or business, or other than the trade or business of performing such services as an employee of such individual, such qualified tips shall be taken into account under subsection A only to the extent that the gross income for the taxpayer from such trade or business for such taxable year, including such qualified tips, exceeds the sum of the deductions other than the deduction allowed under the section, allocable to the trade or business in which such qualified tips are received by the individuals for such taxable year. That's a whole lot of stuff. What does that mean? What that means is that this is basically going to apply to self-employed people who are getting taxed or getting tips, then you can only deduct up to the amount that you have profit. So if you have a loss and you have tips, then the tips, you don't get an extra deduction on top of that. So, it's only to the degree of profitability. So it's kind of similar to Section 179 deductions in that way. And on to D here, we get qualified tips. We're defining, in general, the term qualified tips means cash tips received by an individual in an occupation which customarily and regularly received tips on or before December 31st, 2024, as provided by the Secretary. So they're saying if you are in a business or in an industry where tips are customary, then that can qualify. You can't create a new category now that this tax bill is in effect. So if you are I don't know, who doesn't get tips? I'm trying to think. Just accountants don't typically get tips. That's not a customary thing in the industry. So we can't then create a tip income category in order to take advantage of this new deduction. Exclusions, such term shall not include any amount received by an individual unless A, such amount is paid voluntarily without any consequence in the event of non-payment, is not the subject of negotiation, and is determined by the payer. So it's got to be completely up to the person paying. It cannot affect the delivery of the good or service, and it can't be a haggle, right? So it can't be a subject of negotiation. B, the trade or business in the course of which the individual receives such amount is not a specified service, trade, or business as defined in Section 199 AD2. So this is excluding all the accountants and lawyers and stuff. So when Tax Cut and Jobs Act was created, we had this with the QBI definition. So if we go over here, you can see that there's a list. And Qualified property. Where's the list? Other. Oh, I think we skipped it. Specified. Service trader business means yada yada yada. Oh, I don't want to look it up again. But basically, professional services is pretty much what it comes down to. Okay, so if you were over the QBI threshold and you lost your QBI deduction, then same kind of thing here. You can't get tips deductions for that. That's not going to apply to very many people because they were already excluded under that customary language. And other exclusions C, such other requirements as may be established by the Secretary in regulations or other guidance are satisfied. They might come up with other stuff. Who knows? For purposes of subparagraph B, in the case of an individual receiving tips in the trade or business of performing services as an employee, such individual shall be treated as receiving tips in the course, trade, or business which is specified service, trade, or business if the trade or business of the employer is a specified service, trade, or business. So you can't get around it just by being an employee of a specified service, trade, or business. The whole business has to be an allowable. Okay, so that's the exclusions. So it's got to be voluntary. It's got to be not subject of negotiation. It's got to be up to the payer of the tips, and it can't be in the course of a specified trade or business, whether you're owning the business or an employee of the business or whatever. All right. Number 3, cash tips. So this is confusing. For the purposes of paragraph 1, which is this thing up here, just creating the whole thing for qualified tips, the term cash tips includes tips received from customers that are paid in cash or charged. And in the case of an employee, tips received under any tip sharing arrangement. If you're a bar back in a bar and you get tipped out by the bartenders, then that's going to get included. Cash tips means cash or charge. It's not just going to be cash. So people who write tips on their credit card receipts, or who somebody turns the monitor around at you and says, oh, they're going to ask you a question. So that all counts, basically. So cash tips means cash or charge. E, social security number required. This is pretty much across the board with everything. You have to have a social security number in order to qualify for the deduction. Married individuals, if the taxpayer is a married individual within the meaning of section 7703, this section shall apply only if the taxpayer and the taxpayer's spouse file a joint return for the taxable year. So no married separate. There might be additional regulations created by the secretary as far as to prevent abuse and all this kind of stuff. No deduction, so part H, no deduction shall be allowed under this section for any taxable year beginning after December 31st, 2028. What does that mean? That means this ends. 2028 is going to be the last year for this. So we're getting 25, 26, 27, 28. So we're getting 4 years of tip deductions. And then we go back to B. Deduction allowed to non-itemizers. Section 63B is amended by striking and at the paragraph and whatever and inserting the following new paragraph. So basically what this is that if you look at a 1040, you have all your income items, and then you'll have your standard deduction, then you have your QBI deduction, and then you'll have tax assessed based on that from taxable income. What B there is saying is that they're going to create this deduction outside of itemized deductions. So like we saw this during COVID with the charity. So you could deduct charity inside your itemized deductions, but they also give you a special box outside of itemized deductions to deduct up to $300 worth of charitable contributions. And so it's not exactly clear how the form is going to look, but this deduction will apply outside of itemized if people are non-itemizers, which most people are these days. Although that's changing as more people buy houses at higher interest rates. Omission of the correct social security number treated as mathematical clerical error. They're saying that's not fraud, so it's not criminal, but it does have to be fixed. Exclusion from qualified business income. Section 199A C4 is amended by striking and at the end of the subparagraph B by striking yada and adding the new end to the following new paragraph. Any amount with respect to which a deduction is allowable to the taxpayer under section 224A, which is the new thing that we're creating here for the taxable year. So basically, if you take this deduction, you don't also get qualified business income deduction on the same amounts. So you got to separate the two, which is fine. That just means no double dipping, which I think is reasonable. Extension of tip credit to beauty service businesses. In general, 445B, B2 is amended to read as follows. And basically, they're talking about what industries are going to qualify. So they're specifically allowing the tip credit to extend to barbering, hair care, nail care, aesthetics, body and spa treatments. Originally, the tip credit only applied to places where providing, delivering, or serving of food or beverages for consumption. And what this has to do with is the tip credit basically for employers who would cover the shortfall in Social Security and Medicare payments on behalf of employees. The employers got a credit for that, and this language is extending that credit to these other industries: barbering, hair care, nail care, aesthetics, body spa treatments. So that's great. Let's see. Credit is determined with respect to minimum wage in effect, and this is part of that shortfall issue. Reporting requirements. Returns for payments made in the course of trade or business. A. Statements furnished to the Secretary. Section 6041A is amended by inserting, include a separate accounting of any such amounts reasonably designated as cash tips and the occupation described in Section 224D1 of the person receiving such tips. Okay, so that means that on the W-2, they're going to have to include some form or some box or something designating how much was cash tips under the definition that we just saw, that's cash or charge. So cash doesn't mean cash in this case. And they also have to include the occupation described, which is interesting. The question immediately becomes like, how do they know? How does anybody know that you're a bartender? What if your day job is whatever, you're an engineer, then you bartend on the weekends for fun and for some extra income. So in order for that matching to occur, they're going to somehow list the occupation described on the W-2 itself. The statement has to be furnished to the payee, that's the employee, yes, that makes sense. In the case of compensation to non-employees, the portion of payments that have been reasonably designated as cash tips in the occupation described in Section 224D1 of the person receiving such tips. So again, they have to separate that out like on a 1099 or something. Returns for payments made for services and direct sales. And this is if you're a manufacturer's representative, level marketing kind of thing. But yeah, so, this is all like, no matter what the reporting is, like whether it's 1099 or W-2 or what have you, then, we have to list out, or the employer has to list out what is reasonably designated as cash tips and the occupation. Okay. Now, this is interesting. Returns relating to third-party settlement organizations. These are your 1099-Ks. And it is, in the case of a third-party settlement organization, the portion of reportable payment transactions that have been reasonably designated by payors as cash tips and the occupation described in Section 224D1 of the person receiving such tips. Now, so if you go through Stripe or whatever, some sort of payment processor, and you have an amount and then you have a tip, then okay, the amount is fine, but I don't know how the payment processor is going to list the occupation, because the only way they would have that information available is if the person receiving the tips tells them. So we'll see how that works out. Yeah. So this is all under the reporting of these cash tips. So they have to show up on a payment statement, 1099, W-2, whatever, and they have to identify how much is cash tips and what occupation applies. Okay. Published list of occupations traditionally receiving tips. So no later than 90 days after the date of the enactment of this act, which was July 4th. So whenever July 4th plus 90 days is, so it's going to be August, September. So by July, August, September, October. Yeah, so by October 4th or thereabouts, the Secretary of Treasury or Secretary's delegate shall publish a list of occupations which customarily and regularly receive tips on or before December 31st, 2024. So basically, they're going to publish a list that those occupations can be checked against to see if those cash tips are qualified. Withholding, the Secretary of the Treasury shall modify the procedures prescribed under Section 3402A of the Internal Revenue Code of 1986 for taxable years beginning after December 31st, 2025, to take into account the deduction allowed under Section 224 of the such code, which is this new section we're creating. Okay, so we are in 2025 right now. The effective date of this is taxable years beginning after December 31st, 2024. This year, this rule goes into effect. So when we file taxes in 2026 for tax year 2025, this deduction will be available. However, if you're an employee and you're receiving tips through your W-2, then the question is the withholding, right? What this is saying right here in Section I is that, okay, we're going to adjust withholding rates based on the new calculations, but only starting in 2026. So for 2025, your withholding is not going to change. 2026, it will. What does that mean? That means that in 2025, people who get qualified tips will receive a bigger refund because they will have withholding on the total, not accounting for the fact that there's this deduction. 2026, that refund should go away because they're going to adjust the withholding calculations on the wages to account for the fact that there is this tips deduction. So historically, the withholding changes have been very poorly implemented. So we'll see how this goes in 2026, 7, and 8, and then it disappears again. But yeah, don't get too excited by that. And that is the no tax on tips. Oh, there's a transition rule in case of any cash tips required to be reported for periods before January 1st, 2026, which is 2025 this year. Persons required to file returns or statements under Section Yetta may approximate a separate accounting of amounts designated as cash tips by any reasonable method specified by the Secretary. So nobody's kept track until now. Do your best. That's what it's saying for 2025. But for 2026 and through 28, those years have to be buttoned up as far as the accounting goes. All right, so that's section 70201, no tax on tips. So overall, if you're in an industry that regularly, customarily receives tips, you're going to get up to $25,000 of tip deduction, and you don't get the double benefit with QBI if you're self-employed in this particular industry. The tip credit is extending to other industries, estheticians and barber shops and that kind of thing. And this all has to be laid out on the W-2. Depending on your workplace, tips can be handled in many different ways. In a restaurant, for example, restaurants will often pay the wait staff $2.13 an hour as a base rate, and then the wait staff reports the tips, and then the employer has to make up to minimum wage at the least, and there's an interaction there between how much is the employee reporting that they received and how much is the employer kicking in, right? In some cases, it's basically just an honor system, and the employee fills out a form once a week, say, hey, I received $413 worth of tips in cash. And in other places of employment, there's different systems. Everybody pulls in their money and then they get split back out evenly. There's all different ways to this is done. So the net effect is that the wages of people in these industries should go up because there is an underreporting issue. And we know there is. We'll see how well that takes into effect. Now, the upshot of having more income reported is that the people who are in these industries have a hard time qualifying for mortgages because they underreport their income. So if they report their income, or all income as they're supposed to, which is all U.S. taxpayers are required to report all income from all sources worldwide. If they are more compliant in that regard, then they will have more income on tax documents, and they will have more income to qualify with for mortgages. So there is that silver lining. Yeah, we'll see. And again, this is temporary, right? 25, 6, 7, 8. So 4 years of this, and then after that, this goes away. Now, in 2029, we will have a new Congress, a new administration, and there's always the speculation with these temporary kinds of things. Will the future Congress create a new law that is going to make permanent the temporary things that are created by this law? And you never know. So in this case, the One Big Beautiful Bill Act, a large part of it that we saw last time was making Tax Cuts and Jobs Act permanent, which was set to expire. So it did happen. It did work out in this case. Things were changed. Nothing is perfect. And we will have to wait and see what happens with these kind of temporary provisions created by OB3. All right. But for now, we know that we're getting 4 years of tip deductions up to $25,000, assuming your income is not too high, and so forth and so on. Has to be spelled out on the W-2. All right. That is section 70201.